Good. Right. Now we're ready to come home to sunny South Africa and talk about Tsogo Sun, which of course is a big player on our local market and in the Allsy 40 and so on and so forth. It owns Southern Sun hotels and then gaming venues around the country like Montecasino here in Johannesburg. It is also the owner of big properties, hotels across the region, Cape Town, Durban. We'll talk about the assets in a minute. Market capitalization, 33.05 billion rand. Price to earnings ratio, 16.36. Dividend yield, 4.38%. Very busy company, lots going on.
Always a lot going on. Yeah, nice assets. You mentioned Montecasino, really profitable for it. Santon Convention Centre, they do a lot. But all these groups make most of their money through gaming, through the slots and the tables,
and
compared
in
to
Gauteng,
hospitality.
it's Montecasino as well as Gold Reef and the one out on the west.
Correct.
Which is called Southern
Sun
Silver Sand.
Silver Sands.
I'll have to look at my notes.
I think so, yeah.
Silver Sands.
Shows
yes.
how often we go there, yeah.
You see, I don't get to the west enough.
But yeah, Montecasino, about a quarter of group revenue coming just from that asset. So that, and they're continually expanding that in that regard. Good management team.
Marcel van Oorlog.
Yeah, Johnny
remember, they
Copeland's
spun
there.
themselves out of
HCI,
and then they acquired and merged the assets of the SAB group, which was in that. And they also took over the Gold Reef business along the way, and that's just kind of flowered into this entity with HCI as the controlling shareholder, but now, you know, freely traded on the market.
Yeah, and not a demanding multiple, pays a nice dividend in that regard. So there's a lot of things to, that I think are quite positive about it. I don't think they're doing anything wrong at the moment. They're defending very good margins, 35 to 45% on average.
A couple of other things that I noticed in the process now of taking over Hospitality Property Fund. It looks as though what they're going to do is take some of their core property holdings and inject that into hospitality. So effectively, Tsogo will become less capital intensive, probably with a higher rate of return. And potentially then lease its assets from the property fund.
Yeah, they're doing it in a REIT, I think.
Yes, that could be a plus though.
I think so. I think it's quite a clever structure that they've gone for there. Yeah.
Plus, they're certainly not slowing down. They're acquiring properties from Liberty. They are expanding and spending a lot of money at Gold Reef. They're spending a lot of money, and plan to anyway, at Suncoast Casino down in Durban. They're getting into the Western Cape by way of a 20% acquisition of some of those Southern Sun assets like Grand West and so on. They're spending money on renovating some of their properties around the rest of the continent, particularly the one in Maputo. So the CapEx spend is very admirable. They're clearly not letting the grass grow under their feet.
Yeah, they're not. And I mean, I think they realize that if we get this economic turn and the consumers healthier and wealthier, they want to be in front of line and benefit, and you have to be doing the renovations. You have to create these destination places for people to come game and spend money on food and drinks and stay in your hotels.
Right, let's look at the share chart, because that will reveal quite a nice pickup there, which is good. Now, we've actually got a stake in Tsogo Sun in our HotStocks portfolio. It was one of the smaller ones that sort of hung in there, and we had quite a long conversation where we were positive about Sun International and City Lodge and Tsogo, and we flipped and flopped, and we eventually decided to be in this one. So this one's made us a bit of a gain recently. However, notwithstanding all of what we've said before, the commentary in the recent results is quite muted. They sort of say, look, they're not expecting fireworks.
Well, you can understand it. The management team is saying, you know, what's this economy going to look like in 1, 2, 3 years' time? And to be honest, we don't know. It's very unclear at this stage. We could be in for quite a bumpy ride, or we could have a really nice recovery. So there is a lot of risk in the forward-looking statements for these companies, understandably.
Yeah, so hot or not?
I mean, I like the business, nothing wrong with it. I just think, you know, after the run it's had, I'm probably going to go not hot on it.
I'm afraid I think I am going to go that way too. I mean, it is a little uncertain. There is a bit of a grumpy and wishy-washy feeling around. We've seen that in some of the retailers at the high end even.
Definitely.
And there's a lot of work to be done here. So, yeah, I'm going to lead.
Yeah, look, I mean, the valuation, I think you're safe. You know, it's nice, but there's no need to chase these type of businesses in this environment.
Okay, good. There you go. So we've got two not hots there.